Hello, everybody. Greg, it looks like we are live. So,
Jeff, your camera is off, Jeff.
yeah, I'm working on that. We
Okay.
had a little bit of a technical issue. It took how many MetaStock employees does it take to start a YouTube stream?
There's only two, but there were three monkeys on the side.
All right. I want to welcome everybody here. Thanks for coming. We got it going. Greg, can you confirm that YouTube is actually working? Is it coming through? In any case, I'm going to go under the assumption that it is. So if you're watching us from YouTube, thanks for being here. If you're watching us on GoToWebinar, thanks for being here. It's good to have you here. If you are watching from YouTube, make sure to like and subscribe. It helps a great deal. We're going to go ahead and get underway, and I apologize for the slightly delay. We had a little bit of a technical issue, but I think we're good. And if we're not good, we're still going to do it. So in any case, let me read the
Jeff,
legal.
FYR, I'm sorry for the constant interruption. We are broadcasting on YouTube and GoToWebinar, so we're good to go.
Right on. Well, then, in that case, Greg, today's demonstration is designed to instruct you on using MetaStock and the accounting software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy any security. So, our guest today, a big thank you for joining us. Good morning, good afternoon, good evening. Just a couple of notes of business as we actually kind of get started. If you have any questions and you're watching on GoToWebinar, make sure you just hit the questions box. It'll give you a spot where you can ask your question. We'll be able to see that. You can't chat them in. They don't open up that functionality with big events. So hit the questions box. If you have questions, we'd love to see them. Also, if you were just watching on YouTube, welcome to the YouTube stream. Thanks for watching. Make sure to like, subscribe, do all those good things. It helps a great deal. But if you have any questions, just type those in the chat. So our guest today is Jeff Tompkins. Jeff Tompkins has been a partner of MetaStock for a while now. I believe it's like going on 7, 8, probably 12 years by now. Jeff is somebody that's just taken off in the time that I've known him. He started his career teaching people how to trade in a website called udemy.com during the time I've known him. He's become like a hedge fund manager. He's created a whole bunch of methodologies. And aside from having a really nice first name, it's also a very, very good teacher, very specific about kind of very clear, very straightforward. So without further ado, Jeff, let's go ahead and get you started.
Yeah, great to be here as always.
Good to have you. All right, I'm going to go ahead and I'll send the screen control over to you just so we can, it'll just pop up and say, hey, do you want to share your screen? And I'll let you know as soon as we can see it.
All right.
All right, we can see it, we can hear you. We're broadcasting and we're broadcasting on YouTube as well. So it's all yours. I'm going to get out of the way. I'll be here if you need me.
All right, off to a good start. Thanks so much. Yeah, apologize for the delay, guys, but thanks for being patient and waiting. We'll make it worth your while. So we're going to cover my Slingshot strategy and utilize some really powerful forward-looking indicators and tools to forecast market direction up to 3 days in advance. So a lot of fun stuff to cover today. Jeff Gibby obviously went over a disclaimer with you, but I'll utilize our disclaimer as well real quick, and then we'll dive in. So trading securities and options, of course, involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course, need a broker to trade securities and options and must meet suitability requirements. We will be going over some various results on our session today. I do my best to share real world, real money results, but just know that anything I do share, due to the time critical nature of trading, brokerage fees, activity of other traders, don't guarantee that anyone will mirror that performance. All right, so I'll just give you a brief background on myself. Again, I'm Jeff Tompkins. Pleasure to be here. I have over 2 decades of experience trading the stock, options, and futures markets, and completed a trader internship at the trade desk at Morgan Stanley back in the early 2000s. And that's really where I got kind of my first a glimpse on the institutional side of trading. So I do trade on both the retail and the institutional side. I'll elaborate on that in just a second. But just a little over 10 years ago, I founded Altos Trading, where I serve as the chief investment strategist. We rapidly grown over 60,000 members in over 100 countries across the globe. And so I do trade on the institutional side. I manage money for my clients at Altos Capital as a hedge fund manager. And I'll be sharing some methodologies, and I really strive to share institutional level tactics and really break down that gap between the retail and institutional side. So as I mentioned, I got kind of my first glimpse into the institutional side back in the early 2000s at Morgan Stanley, and quickly noticed there was a big gap between retail and institutional in terms of the tools that were available, the strategies that were used. But the big thing I noticed was that I was using a lot of lagging indicators up until that point. And once I started focusing more on forward-looking indicators and information, it really turned my whole trading around. So that's really my goal here today on our session. But ultimately, that led me to develop an indicator called Trade Trend, which we're going to be incorporating into the Slingshot strategy today. So let's start out by kind of laying some foundation and talking about some of the difficulties that we face in trading and investing. So this is I think a very useful psychological curve as it relates to the financial markets. And so I'm going to walk you through this and then talk about how this impacts our trading decisions. So anytime we get into a trade, obviously we have some degree of optimism, right? We think we're getting into the trade because we think it has a good chance of working out. All right. And then that can turn into enthusiasm, exuberance, even euphoria if the trade's working out in our favor. But markets never move in a straight line, right? We have volatility, and we're going to be talking about volatility on our session today. So that trade can move against us at any time, right? Without any sort of forewarning. And that exuberance and euphoria can quickly turn to anxiety, denial, fear. And this is where you tend to see panic selling in the market, right? So this is where people are taking losses when the market is moving against them. You get panic, capitulation, discouragement, but then that can turn around, right, into renewed hope, belief, optimism. And this cycle just repeats itself over and over again. But the key here to really understand is that we tend to get into trades when there's a high level of financial risk. So I don't particularly like the term greedy or fearful. Those are two psychological components I try to remove from my trading decisions. But this is really what happens, right? We get greedy when there's a high level of financial risk, and fearful when it might actually be the best time to trade. Okay, so I want you to keep this psychological curve in the back of your mind as we start to dive deeper into the Slingshot strategy. So let's just lay a little more foundation in terms of psychology, because it is such an important aspect of all of our trading decisions. So anytime we enter a directional trade, right, we think a stock's going to go up, our goal is obviously to buy low and sell high, but that actually goes against our human instinct. So instead, when a security goes down, we sell it, and when it's already gone up, we buy it. And this is often why we're late to the game, right? We're late getting into trends. We then panic when price is falling because, of course, we don't want to lose money. But then we buy when it's rising because we're afraid of missing out. It's the FOMO mentality. And then to compound that problem, we're wired to repeatedly make the same mistake. So we buy high and sell low because that's what our emotions tell us to do. So without a solid trading plan, we're really vulnerable to our emotions. And in addition to that, if you lack a strategy that can identify momentum shifts early on in the trend, right, which means that you don't know when to get in or buy low and get out and sell high, that can pose a major problem for inexperienced traders, but also very, very experienced traders. Okay, so we're going to turn the tables today on our session using the Slingshot strategy. So instead of being greedy when there's a high level of financial risk, or fearful when it might actually be the best time to trade, we're going to turn this around. So I'm going to demonstrate with the Slingshot and how you can do the opposite. For anybody who's a Seinfeld fan out there, there's the episode where nothing is working out for George Costanza, right? And he realizes if he just does the opposite of of everything he was previously doing, everything should work out for him. Well, that's kind of the adage from Warren Buffett, right? Be fearful when others are greedy. So it's a contrarian approach that tends to lend to long-term success in the market. This is how iconic traders like Warren Buffett, George Soros, Carl Icahn have become billionaires over the decades, right? So what I'll give you today on our session to make it easier. Number one, you're going to discover the slingshot setup that's worked 100% of the time. So when you apply this strategy to the major indices, the S&P, the NASDAQ, the Russell, you go all the way back to the dawn of the stock market. This plays out, as I'll demonstrate, 100% of the time. There's not much out there that's that accurate. I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Now, we're not going to be able to pick an exact bottom and an exact top, right? That's an impossibility, but we can get remarkably close. I'll show you how to apply this setup to any market in any time frame. So everything that I demonstrate really can be applied to any stock, any ETF, any futures contract, any Forex pair. We're going to look at it on all of those, okay? How to eliminate the majority of your losing trades. So I'm going to give you a really powerful tactic that I think is highly underutilized on the retail trading side, that can keep you out of bad trades. So it can eliminate a lot of your losing trades. Now, we can't eliminate all of them. There's always going to be a losing trade here and there. But we obviously, as our biggest overhead in our trading business, want to minimize those as much as possible. And when we're taking directional trades, a very effective way to do that. So I'll give you that trick. We'll look at some trade examples, and then stick with me to the end, and I'll show you how you can copy my success and get my trade signals that I use to make a living in the markets. So again, as I mentioned, I trade on both the institutional and the retail side. So I do trade my own account, and I do trade for a living. So let's dive a little bit deeper and imagine if we could buy low and sell high without using any guesswork. So all too often we use some degree of guesswork or intuition in our trading, and we want to minimize that as much as possible. Well, there's actually a volatility study that's made this possible going back to the beginning of the markets. And it's a strategy that I call the slingshot. It allows us to reliably buy low and sell high. So again, if you apply this to the major indices, we'll say the S&P 500, okay, going back all the way to the dawn of the stock market, okay, it's identified every major market crash, black swan event, bear market, as well as when the market is finished selling off and it rebounds, okay? So just warning of a sell-off is worth its weight in gold, right? Because as we're going through this, think of that psychological curve we looked at earlier, right? There's the fear component. So this is where people panic sell. But if you knew with a high degree of reliability when the market is vulnerable to a sell-off, it drastically reduces that fear component. So you can protect your open long positions, hedge your portfolio, put on speculative bearish positions. Okay, we'll look at all these types of options. Now we're going to use volatility bands. These volatility bands, once they stretch a certain degree, right, they can't go any further. They have to bounce back. This is how we get directional moves in the market. This is how we get trends and trend reversals. And I call it a rubber band effect. So it makes it possible to accurately identify tops and bottoms in the market. Okay, so we're going to look at some charts and visualize this. And I'm going to pick past charts of some of the worst periods in the market that we've experienced. This is from back in the early 2020s when we had the COVID crash. This is a daily chart of the S&P 500. Okay, and again, as we're going through this, keep that psychological curve in mind. And I'm just going to, for now, walk you through kind of that aspect of it and what's going on here. So if we hop in our time machine, go back to February of 2020. So we're kind of around the third week of February back in 2020. What are the S&Ps doing? They're hitting new all-time highs. Okay, we've been in this decade-long secular bull market. And what do market participants, what are they experiencing? What do they have in mind? Well, probably some FOMO mentality. Maybe they didn't take part in a lot of that bull market, right? They missed out. Or maybe they were in it and they're uncertain of how much longer it's going to run, right? So all these question marks start popping up, and we then become very vulnerable to emotional decision making. But the key here to understand is that when you're near market tops, you get, and you can easily verify this by looking at volume profiles, right? Volume at price, and see how many people are buying in near market tops. It's a lot. Okay, but this is when markets are vulnerable, right? They're vulnerable to a sell-off. One little negative catalyst could derail that bull market and cause a sell-off. Well, that's obviously what happened back in 2020. Okay, so this is actually where we want to look at selling when most other traders are buying. Okay, we all know what happened. S&P sold off to the magnitude of 30% plus in just a few weeks. So we get all this panic selling. And think of that psychological curve. What's going on? Right? People are panic selling, capitulation. But that creates opportunity. So the smart money comes in, takes advantage of that panic selling, and buys when most other traders are selling. So this is where your George Soros's, your Carl Icahn's, your Warren Buffett's of the world are coming in and buying. Okay. So what's really interesting here, if we look around the third week of March, okay, S&Ps are down over 30%. So they started up around the 3,400 handle. By around the third week of March, they're down around the 2,200 handle. If you think of the catalyst that caused this, right, there's really no resolution at this point. We don't have any viable treatment options, vaccines. We still have worldwide quarantining, global economy shutting down, all kinds of crazy stuff happening. And yet the market rebounded, right? So this is how financial markets work. The S&Ps rallied to the magnitude of about 1,000 points. And by mid-June, they were right back up to where that initial sell-off ensued. So this is where we want to look at selling, taking profits, when most other traders are starting to catch on and buy back into the market. Now, I'll point one other thing out here. Notice how around the middle of June, when markets have returned back up to roughly the 3,200 level, the S&P start to, well, first of all, they pull back a little bit, and then they start to kind of consolidate in a sideways pattern. Okay, this is no accident. You'll see this all over the place with the slingshot. Okay, this is very likely just profit taking from the quote unquote smart money who got in back in late March. Okay, so take a kind of a mental snapshot of this chart. This is the slingshot, but we're going to apply some indicators on this chart. We're going to come back to this chart, and I'll show you how to actually trade this. Okay, so by the end of our session, you're going to discover one setup that hasn't failed going back to the beginning of the market. It's so reliable. If you apply it to the major indices, the S&P, the NASDAQ, the Russell, okay, it's played out 100% of the time, as I'll demonstrate. Okay, that includes the tariff crash that we saw last year, the 2022 bear market. It happens repeatedly with astounding predictability. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. As markets become more volatile, more erratic, less predictable, we're in the midst of that right now. Okay, and in fact, there's a slingshot playing out as we speak. So you're going to discover why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off. Okay, again, this can completely turn your trading around because it helps drastically reduce or even eliminate that fear component from your trading decisions. How to identify when the market is likely to go up. So after there's been a sell-off, okay, we need some reliable tool to help us determine when the market's likely to go back up. How to determine exactly how far the market is likely to go up. This is critical. It ties into what I call the trader's dilemma, right? You get into a successful trade, it's moving in your favor, then that psychological curve comes into play. Do I get out of the trade with my profits now and potentially miss out on additional profit potential, right? Do I exit too early, or do I hold on too long? The trade reverses, moves against me, and all my profits evaporate, or even worse, turn into a loss. Okay, we're going to solve that problem with the slingshot. I'll show you how to get your hands on a tool that will change your trading forever. That's a bold claim, but it's one that I make from personal experience. So this is something that's changed my trading forever in a very positive way, and I'll show you how. Okay, so let's dive into the slingshot. So why do I call this the slingshot? Well, As you pull a slingshot back, muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot's released, the elastic energy is transferred to the stone as energy of motion, okay? So it's what's referred to in physics as kinetic energy. So, right, an object in motion stays in motion until something stops it. Well, this is, I think, applicable to financial markets, right? This is why you get trends in the market. There's momentum. That trend continues for a period of time until something stops it. And it's really just all supply and demand. So how many buyers versus sellers do you have? And there's a balance, right? So when it gets out of balance, there's more buyers than sellers, you get an uptrend. And conversely, more sellers than buyers, you get a downtrend. It's really that simple. So you could take every indicator, every strategy out there, and they all boil down to that, right? Are they actually identifying the supply demand curve? So obviously, when we have demand after there's been a market sell-off, right? Most retail traders see that as fear in excess supply, and they lose money in the sell-off. But you want to look at it as demand, right? You want to look for the buying opportunity. So once these bands become overstretched, it gives us a buy signal, and then we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, so this is the essence of the slingshot. So how are we going to accomplish this? We're going to use volatility, and there are different types of volatility. So mainly there's historical volatility and implied volatility. So as the name suggests, right, historical volatility, what's happened in the past. Well, that can be good to know, but it's not going to really help us make trading decisions, right? That's where you get lagging information. That's what most indicators are based on, what happened in the past. We want to look at what's likely to happen in the future. So we're concerned with implied volatility, which is a forward-looking predictive indicator. So there are a lot of ways to measure volatility to gauge it, right? We're going to use an indicator called the Bollinger bands. And these bands are going to tell us when prices move too far from the mean or the average and is likely to reverse direction. Now, this indicator is available on the MetaStock platform. And like any other indicator, there's a multitude of ways to use it. You can give it to 100 traders. It can be used 100 different ways. I'll show you a unique way to use it that can actually pinpoint turning points in a security with astounding accuracy. Okay, this is what it looks like. So again, I want you just to take a mental snapshot of this because this is what the slingshot looks like. So I'm going to point a couple things out here. And it doesn't matter what this stock is, just call it ABC stock. Okay, ABC stock is starting to trend down. And by the way, if you're not familiar with the Bollinger Bands, I'll give you just a high level overview of them momentarily. But they consist of 3 lines. And so notice how price is breaching that lower line. Okay, then we get a sell-off in ABC stock. Well, trends don't persist forever, right? So eventually that excess supply turns into demand. It attracts buyers who come back in and drive price right back up to where that sell-off initially breached that lower band. Okay, so this is what the slingshot looks like, and I'll walk you through all the steps. But I'll first give you just a high-level overview of the Bollinger Bands so you understand why we're using them. Okay, again, they consist of 3 lines. So we take a simple moving averages of the security's price. That's going to be the center line that you see there on the chart. Then we take a standard deviation of the security's price. So standard deviation is just a mathematical measurement of average variance. Okay, but this is going to help us gauge a couple things. Volatility, okay, number 1. It's going to tell us how spread out numbers are from an average value. So I won't go into the calculations of standard deviation. You don't need to know that. But what you do want to know is that because standard deviation is a measure of volatility, when the market becomes more volatile, the bands are going to widen. And when the market's less volatile, the bands contract. So that's important to understand. Okay. Most charting platforms, including MetaStock, will default to a 20-period SMA. Again, that's our center line. And then a 2 standard deviation setting for the outer bands. I'll refer to them as the outer bands or the upper and lower band. Okay. So those are the settings that I use universally across any time frame, any asset class, I don't adjust those settings, okay? So how do we use these to buy low and sell high? Well, again, there's a lot of ways to use these. They've been around for decades, developed, as the name implies, by John Bollinger. I think like back in the 50s or 60s. Okay, so they've been around a long time, used in a lot of different ways. But again, I'm going to show you a unique way to use these called the slingshot. And so this is where price can exceed or hug a band envelope for prolonged periods during strong trends. So what we do is we wait for the lower band to break, and then we wait for a buy signal. And I'll explain what all this terminology means as we visualize it on a chart. But then we exit when price returns to the breaking point. So it's rather simple. And frankly, the best strategies out there are the simple ones. Okay. But what you should know is that the slingshot setup occurs with astounding predictability. Okay, so the major market indices have returned to the initial volatility breakout with 100% accuracy. And I should caveat that because we're in a slingshot right now. So we haven't yet completed this current slingshot. Okay, but we will. It's almost a certainty in my mind. Okay, but that includes the COVID crash of 2020, the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the 08 mortgage crisis when markets lost over half their value in the second half of the year, the 2000 dot-com bubble, the tariff crash, every black swan event, market correction, major crash, bear market, you name it, this is played out. Okay, and we're going to look at some chart examples of these. So let's do that now. Okay, I told you we come back to this chart of the S&P 500 from back in early 2020 during the COVID crash. So now I have the Bollinger Bands plotted. Okay, and I'm going to walk you through the slingshot. So if you look at the left edge of the chart, okay, and again, as we walk through this, keep that psychological curve in your mind because it's going to really help. I think it'll give you a light bulb moment. That light bulb will go off and you'll be like, okay, I see what's going on here in terms of broader market perspective, like what's actually going on in traders' minds. Okay, so we're at the tail end of this decade-long secular bull market. S&Ps are putting in new all-time highs. Okay, and what are the Bollinger Bands showing us? We're in low vol conditions, low volatility. So we have a low VIX. Okay, the bands are narrow. They're parallel and they're horizontal. Okay, so we're in vol contraction. What is price doing relative to the bands? It's kind of bouncing around from the lower band to the upper band. So it finds support at the lower band, resistance at the upper band. It trails up, hits that upper band. But then around the third week of February, it starts to rotate lower into that lower band. And then notice here, we get a breach of the lower band. This is where the slingshot starts to get pulled back. So this is the point in that psychological curve where traders who were long, or maybe just started to get long, bought in near the market top, are starting to get fearful. They may be starting to lose some money or see some of their profits that they maybe previously had evaporate. So the first step is to look for that breach of the lower Bollinger Band. But something else has to happen simultaneously. When we get that breach of the lower Bollinger Band, we have to have a simultaneous divergence of the outer bands. And see how that happens? We go from relatively narrow outer bands to widening or diverging outer bands. This is a confirmed slingshot. And this tells us that the market is likely to rotate lower. Well, obviously that's what happened here. Okay, so we get a sell-off that ultimately creates demand or buying opportunity. So as a contrarian trader, you would be coming in here and taking advantage of that panic selling and buying. And as we previously looked at, over the next few months, the S&P's rallied and returned right back up to that initial sell-off level. This is where the slingshot gets released. This is where we want to look at taking profits. And I pointed out previously when we looked at this chart, S&P's pulled back a little bit right there, and then they move sideways. Okay, this is likely profit taking. Okay, so if you overlay that psychological curve onto this chart, you can see exactly what's happening. Okay, let's look at another example. So we'll look at an individual stock. This is Apple. This is a daily chart. Okay, what's happening on the left half of the chart? Apple's in a strong uptrend. Okay, it's trailing the upper band. Then around the middle of the chart, it starts to, we get a little bit of a downside retracement. Okay, now we'll look at some various ways to use the Bollinger Band, some common ways. But for all we know at this point in time, this might be just a normal downside retracement in the context of this uptrend that will resume back to the upside. And for anyone out there who's a candlestick analysis trader, you would recognize these as two bullish reversal candlesticks. Okay, right off that lower Bollinger Band. So I would venture to guess a lot of people got trapped here on the long side, thinking that this was just a normal pullback and Apple was going to resume its uptrend. Well, that's not what happened, because we got a breach of the lower band on that second candle and a simultaneous divergence of the outer bands. And sure enough, we get a sell-off in the stock. It rotates down into around the 168 handle level of support, attracts buyers, drive price right back up to that initial volatility expansion level. And once again, notice how the stock kind of pulls back and consolidates there for about a week before it resumes its uptrend. Okay, profit taking. There it is. Let's look at another one. This is the QQQ. So this one doesn't look as obvious, right? So this is from back in 2018. We had, I think, like 4 corrections that year. It was a volatile year. What's happening on the left edge of the chart? Okay, price is kind of just moving sideways, but it's slightly uptrend, right? Slight uptrend. Hits the upper Bollinger Band, pulls back into the lower Bollinger Band, breaches it. Okay, we were previously in low vol conditions, so we probably had a low VIX, right? We have narrow horizontal parallel Bollinger Bands. This is where traders are getting complacent. They're buying dips. They think any pullback is a buy the dip opportunity. Well, as a Slingshot trader, you would know better. We get a breach of the lower band, simultaneous divergence to the outer bands. We're going into vol expansion, and we get a sell-off. And there were actually like 3 or 4 embedded Slingshots in here that could have been traded as well. But ultimately, towards the end of December, it created buying opportunity and drove price right back up to that initial level where the sell-off ensued. What about intraday timeframes? Yeah, same methodology applies. Okay, it's all really built on supply and demand and fear and greed. So this is a 5-minute chart of AMD, Advanced Micro Devices. Okay, on the left part of the chart, okay, the stock's it's range bound, right? It's in a consolidation pattern. It's bouncing from between the upper and lower band. Okay, but ultimately it breaches the lower band. We get a simultaneous divergence of the outer bands. And again, there were a couple Slingshots embedded in here that could have been traded, but it created buying opportunity and price came right back up to that initial volatility expansion level. There it is. All right, so we've primarily focused on identifying when the market's vulnerable to a sell-off, right? You get a breach of the lower band, simultaneous divergence to the outer bands, you have prior band convergence or narrow horizontal parallel bands. The most challenging part of the Slingshot is identifying the buy zone. So when do you come in and buy after there's been a sell-off? Okay, that's really the trick. Not everybody shorts stocks or shorts the market. Some people just like to buy, right? And that's perfectly fine. But the trick is to identify when the band is overextended and ready to snap back. Okay, I used to do this all manually using things like price action, candlestick patterns, support levels. So I was using a lot of guesswork and intuition. And I found that I was missing a lot of the buying opportunities or getting in too late. So I spent well over a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. And ultimately, I got a formula dialed in where I could configure it to work on all time frames, all markets, in an adaptable algorithmic formula that can reliably forecast market trends. So the result is a tool that provides accurate buy and sell signals near the outer channels of the Bollinger Bands up to 3 candles in advance of the move. So I wanted something that gave me some degree of advanced notice. So that means if I'm applying this methodology to on a, let's say, a daily chart, right, I would have up to 3 days of advanced notice. So if there's a buy signal, right, it's going to give me a forecasted entry price up to 3 days in advance. And I found that when you formulate the right combination of momentum studies, volatility studies, price action setups, you can accurately identify buy and sell signals near the outer bands. And it was remarkably powerful and accurate. So this is what's been built into my trade trend indicator that we've developed in partnership with MetaStock. So trade trend gives us accurate buy and sell signals up to 3 candles in advance of the trend. Okay, so if you're using it on a 5-minute chart, you have up to 15 minutes of advance notice of a buy or a sell forecast. It uses a proprietary momentum algorithm that reads the market in real time. Okay, it also has a trailing stop algorithm, also reads the market in real time, gauges trend strength, momentum, volatility. It helps us lock in profits on our successful trades before the market reverses on us. It can help forecast short-term and long-term trends with astounding accuracy. It can be applied to any asset class, equities, ETFs, futures, Forex. It also includes a scanner that within seconds can help us find these opportunities, scan for buy and sell signals on any time frame. I love using this indicator for my directional options trade. So I do a lot of my trading is in the options market. Okay, if you're trading directional option strategy, it's very time critical. Okay, you have to be spot on, or you likely will lose money. So I love using it for my option strategies. The indicator does not repaint. So once you get a confirmed signal, it's set in stone. So what repainting means is that a lot of indicators will change after the fact. Okay, and if you've ever looked at an indicator in hindsight on a chart and it looks great, but then you go to use it in live market conditions and it doesn't work very well, that can often be due to repainting. So trade trend does not repaint. It has built-in protection to avoid whipsaws. It helps us capture most of the trend before it reverses. It's designed to limit losses and let profits run. Now, there are always going to be losing trades with any strategy or indicator. There are going to be losses, but it helps limit those, okay, and then keep us in the trades that are working out. It can be used with any other indicator system for added confirmation. So like on our session today, we're applying it to the Slingshot. It's going to help us identify that buy zone and remove guesswork from our trading decisions so that we're not vulnerable to that psychological curve that we looked at. Okay, I mentioned I'd give you a handy trick to help reduce a lot of your losing trades. So when you're getting into a directional trade, okay, you have a few options in terms of order types, right? You could use a market order, you could use a limit order, and I've actually looked at the retail broker data on this. Not surprisingly, most retail orders are going to be market or limit orders. And that's not that there's anything wrong with that. They might be appropriate, right? But when you're taking a directional trade, for me, it makes a lot more sense to use a buy stop or sell stop order. Okay, that simply means that if you think a stock's going to go up, rather than get in right at the current price with a market or limit order, right, you could be wrong right off the bat. You could think a stock's going to go up, you go long, and it moves against you right off the bat. Well, if you got in with a market or limit order, you're in a losing trade immediately. By using a buy stop order, we tell our broker we want to get in at a slightly higher price than the current mark price. And we need follow through, and we do that with a buy stop order. We need follow through into that price level to get filled on our order. So if we don't get that, we simply don't get into the trade, and it can keep us out of a lot of losing trades. This is automatically built into the trade trend indicator. So when it gives us an entry price, it's going to tell you use a buy stop order at X price. And we only get filled if there's follow through. So in many cases, you're in a winning trade off the bat because it has to follow through, right, in the forecasted direction. If it doesn't, then you don't get into the trade. And conversely, you just do the opposite if you're shorting, right? Use a sell stop order. Okay, so this can help filter out a lot of false signals and improve consistency and increase profitability. Can't keep us out of every bad trade, but it keeps us out of a lot of trades that wouldn't otherwise work out. Now, I'm a big believer in backing up anything I teach with real world, real money proof, right? I'm not just throwing this out there as theory, right? I actually use this myself. So I'm going to share some of my account statements from terrible periods in the market. So this is my, of course, now it's Schwab, acquired TD Ameritrade, but my TD Ameritrade statement from back in February of 2020. So I was trading the Slingshot using the trade trend indicator. So I got a sell signal from trade trend. I saw the breach of the lower band, the simultaneous divergence of the outer bands. Due to the catalyst behind all this, right, there was a lot of uncertainty, a lot of market volatility. I was very conservative. So these are just my positions from the last week of February. And I was trading small position sizes, 1, 2, 3, 4 contracts. And I was putting on some bearish positions, okay, to play the Slingshot on the way down. So in that last week of February, I booked over 13,300, okay, just trading the Slingshot, okay. Then March rolls around, I get the buy signal from trade trend. I'm still being very conservative here, but I start to put on more positions. So I'm still doing small lots, small position sizing, 1, 2, 3 contracts, just putting on more positions, but I was mostly in cash. Okay, by the end of March, I booked over $27,000 in profit. So during a historical market crash, terrible period in the market, a lot of panic selling. I had just recently launched my hedge fund at this point in time. I saw an unprecedented number of hedge funds going under due to margin calls and over leveraging. Okay, we weren't one of them. We rode this out very nicely and came out with a nice gain at the end of the year. Okay, but during this terrible period in the market, I booked over 40,500 just using the Slingshot and the trade trend indicator. That's it. So of course I can't guarantee anyone will replicate this, but I'm showing you exactly how I accomplished it. So this can be applied to any market, any time frame. You can do this with any size account, right? You decide your position sizing, your risk tolerance, but trade trend will provide predictive buy and sell signals. It's designed to do so before the trend really develops, up to 3 candles in advance. So again, that means if you're trading off a daily chart, you have up to 3 days of advance notice when you get a buy or sell signal. That might trigger that day, the next day, or it might trigger 3 days from now. We don't know. Okay, but if you're trading off a 5-minute chart, let's say, right, you're a day trader, you're going to have up to 15 minutes of advance notice. And what's really powerful, I'll tell you how you can get the indicator for yourself momentarily. Apply it to your chart. Go back to every market crash, every black swan event, right? Every major market sell-off, you're going to see a trade trend sell signal. When the market ultimately rebounds, you'll see a trade trend buy signal. Go back as far as you can on your chart. We'll look at some examples real quick. This is the flash crash of August 2015. Okay, market's just kind of plugging along. This is a chart of the S&P 500. It's range bound for a few months. Okay, you wouldn't think anything crazy is about to happen. Well, August 19th, trade trend flashed a sell warning. Literally one day before the market crashed. And I'm keeping the Bollinger Bands on here because I want you to spot the Slingshot as well. You see the Slingshot there, right? On August 18th, you had converging Bollinger Bands. Price was inside the bands. But then started to test that band on the 19th when we got the trade trend sell signal. And then we got a breach. We got a simultaneous divergence of the outer bands. Classic Slingshot. Okay, then trade trend gave us a buy signal in early October on that double bottom before the market's rebound. What about the 08 mortgage crisis? Okay, so S&Ps are just plugging along, putting in some new highs. Okay, May 21st, trade trend flashes a sell warning. Literally a couple weeks before markets went on to lose more than half their value in the second half of the year. It also gave us a buy signal in late November when markets bottomed and ultimately rebounded. Going back over 2 decades, this is the 2000 .com bubble. Okay, same thing. S&P's putting in new all-time highs in August, early September. You guys can spot the Slingshot now, right? We had prior band convergence, but then we get a breach of that lower band. right? What happens? Simultaneous divergence of the outer bands. Trade trend flashes a sell signal in September. Here's the market sell-off. It then gave us a buy signal in late September, early October before markets rebounded. This is the 2022 bear market. Okay, S&P's putting in new all-time highs. Literally a day after the all-time high in the S&Ps, trade trend flashed a sell signal right at the beginning of 2022. Okay, gave us some nice warning there before we went into a full-on bear market that year. This is the tariff crash. Okay, once again, putting in new all-time highs. Traders have FOMO mentality. Okay, maybe they have been long, have open profits, and they're afraid of those evaporating and turning into a loss. Okay, well, trade trend gave us a warning in February. Okay, literally 2 days after the all-time high in the S&Ps, told us be prepared for a sell-off. There it was, and it gave us actually 3 triggered sell signals on the way down. Okay, there they are. And then it gave us a buy signal on April 9th when we got that huge rebound and ultimately returned back up to that initial sell-off level. There's the slingshot. So I traded this during the tariff crash. This is just one of my positions. So here I'm just using the slingshot and the trade trend indicator on the micro S&P futures. Over 40,500 in profit. And I was just trading a few contracts here. So guys, virtually every system will produce winning trades if you can stick with it long enough. But the problem is they don't keep you out of the market when conditions are not favorable. And you end up giving back your profits on the losing trades. Okay, so that's what we need to ultimately reduce as much as we can, right? So I also do a lot of trading in the futures market. So this is right out of my Thinkorswim account. This is just using the trade trend indicator. So you can use it as a standalone as well. It's very powerful when you apply it to strategies like the slingshot, but it can be used as a standalone. So full transparency here, I have losing trades. You can see my losers in there, right? But the indicator helped me keep those relatively contained. And my winning trades, it helped maximize those. So it kept me in the trend for as long as possible before it reversed on me. Okay, and I was just trading one lots here, one contract. Okay, this is real world, real money example of using trade trend with the slingshot. I was trading a few futures markets here. Okay, traded it on the way down and then on the way back up. Over 26,600 in P&L on the day with over 115,000 in open profit. I think I was trading 4 contracts here. All right, so I'm gonna make a promise to you guys. I wanna help you have days like these. I can't guarantee you that you'll replicate any of this, okay? But I will guarantee that I'll give you access to the exact indicator that I use to accomplish these results that I've shared with you today on the session. So this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I don't hold anything back. So I give you the full version, right? I don't give you a basic version of the indicator where I'm using the advanced pro version, right? I give you the full thing and exactly what I'm using. So I'm going to walk through everything that you get today and then show you how to get it. So that's going to include 12 months of the trade trend indicator that you can apply to any asset class, equities, ETFs, futures, Forex, whatever you trade. Okay, it's going to give you exact entry and exit signals. You're also going to get weekly live interactive sessions with me. We meet with our members at Altos every Tuesday at 7 p.m. Eastern. Okay, we, like we did on our session today, focus on a new strategy each week. We do market overviews, look for trade trend buy and sell signals. We record all those sessions and post them in the members area. So even if you're not able to attend live or you want to go back and review anything, you're able to do that. You get full support and coaching from me on those sessions weekly. Okay, only limitation is I can't give you personal individualized trade advice, but I'm there to help coach you, okay, on a weekly basis. We focus a lot on trade management. So we go through different tactics to manage positions, and we do a lot of teaching on trade adjustments to take losing trades, mitigate losses, and in some cases, transform those into net profitable outcomes. I'm going to show you how you can get my top 2 tickers for the week. I send those out to all of our members. I'll show you how you can get those too. But this is all designed to help you cut the learning curve, right? And start trading with more confidence, more consistency, less guesswork. Okay, so let's walk through the package and I'll show you how you can lock it in. Okay, so this includes 12 months of trade trend on the MetaStock platform. You get the weekly live sessions, you get coaching, you get access to our exclusive invitation-only Facebook group of around 1,000 members. Okay, you're going to get additional training and curriculum on trade management and adjusting options trades and taking losing trades that aren't working out, mitigating losses, and in some cases fixing those and turning them into net profitable outcomes. Ultimately, this is all designed not just to give you the tools, but to also give you the education to trade whatever asset class that you like to trade. And then we have 2 powerful bonuses. I mentioned my top 2 picks. So every Monday I go to work and I find the top 2 trade trend buy or sell signals, and I send those out to our members. Okay, I send them out by email. So as you're getting up and running with the indicator, you can kind of see how I'm selecting, what I'm selecting. I'll show you what one looks like in just a second. Okay, we normally retail that alert service by itself for $5.95, but you're going to get that along with the indicator today, as well as my latest ebook, How to Create Low Risk Trades. So this is a money management ebook that goes through different tactics to mitigate risk, and in some cases even eliminate it from your trade. Okay, so we built this very robust package that includes education, powerful tools to again help you make more confident, informed trading decisions with a retail value of over $5,000. We're knocking 80% off that retail price today. You can get the indicator and everything else in this package, including the weekly alerts, for just $9.97. Okay, this is limited to 25 seats. If you want to scoop one of those up, the link is altostrading.com/trade trend. We'll hook you up with the indicator. We'll get you all set up today. We'll get you access to the members area, and you can start to attend our weekly strategy sessions, receive my top 2 weekly picks, all that good stuff. All right, I am going to open it up to questions momentarily. I'll show you what one of our weekly alerts looks like. Okay, we actually send out a supplemental option alert along with it. So if it's an optionable stock or ETF, and you prefer to trade the option in lieu of the underlying stock or ETF, we provide that as well along with the alert. This is one we did a while back on CRISPR Therapeutics. This is a snapshot of our track record. It's done incredibly well over the years. All right, and then you get my latest ebook as well. Okay, in the interest of time, I won't go through all the testimonials. We do get thousands of testimonials from our members who use the trade trend indicator and strategies like our Slingshot strategy. All right, I have a guarantee as well. So we want all of our members to be happy. We also want to give you time, right? There's a learning curve with everything, right? You got to get comfortable with it, figure out how to use it, practice, which by the way, I encourage everyone practice paper trade. But we want to give you time to do that. So if you haven't earned at least the cost of your membership fee back in the first 90 days, and that could be if you just don't use it, you get busy, or you've been paper trading, right? Which again, I encourage you to do. We'll give you an extra year of the indicator on the house. It's a $1,499 value. Okay. We want to give you enough time to figure it all out. So I'll go ahead and open it up to questions. I'll also give you our contact information. So you can contact us anytime at support@altostrading.com. During business hours, you can give us a call, 800-895-9348. We have a very helpful, friendly customer service staff that is there to assist you when you need it. Again, that link is altostrading.com/trade trend. There's everything you get in the package. Since I haven't been monitoring Q&A, Jeff, do you want to maybe jump in and relay any questions to me? And while you're doing that, I'll throw up the indicator on the MetaStock platform so people can kind of see what it looks like.
We've got a ton of questions. So, yep. Well, I say a ton, but it's maybe like 6.
Okay, all right. Happy to
Kenneth wanted to know, do you always, if you always use 2 standard deviations for your Bollinger Bands, or can you vary this in certain situations?
Yeah, good question. So for the Slingshot, I use the 2 standard deviation setting, but Occasionally, I will use a 1 standard deviation. I still keep the 2 standard deviation setting indicator on my chart, but I'll occasionally add a 1 standard deviation, which of course is going to fall dead center between the lower and upper band and the center SMA band. But you do often see reversals there. I use that one more for trend continuation. So like if we're in an uptrend and we mean revert, but we pass the 20 SMA, the center band, you'll sometimes see that retracement go to a 1 standard deviation move and then resume the uptrend, right? And so I'll use it for that. But for purposes of identifying a sell-off, you want to see a breach of that lower 2 standard deviation band. The reliability of a sell-off, forecasting a sell-off on a breach of the 1 standard deviation band will not be as high.
All right. One wants to know, does the software, what platforms does TradeTrend work on?
Yeah, so as I mentioned, we initially developed TradeTrend with MetaStock. So we partnered with MetaStock. Geez, can't remember the year. It's probably been like 7-8 years.
It was 2018.
18. All right. Wow. Yeah. Like 8 years. Wow. So that's where we initially developed it. We have rolled it out for additional platforms. So we also offer it on some broker platforms like Thinkorswim, NinjaTrader, TradeStation, as well as some cloud-based charting platforms like TradingView. And so for the package day, you get it on MetaStock, but we'll throw in we'll comp you a second platform if you want it on one of those other platforms as well as part of your package. We normally don't do that. We normally charge an extra licensing fee for a second platform, but I'll throw that in for you today if you want it on a second platform.
And I'll add to that too. If you haven't heard of MetaStock before, it's been rated the best software in its price category for like 32 years in a row. And we will throw in a free trial as part of this package. So if you don't have a platform that works with it and you want to try it with MetaStock, you get some really cool stuff with MetaStock that I'd say isn't available in a lot of other platforms. Like a good thing that comes to mind is full market scanning, or support for a lot of different markets globally, or the expert advisor commentary, which kind of helps you understand the symbols and stuff like that. So I'd encourage you to try it on MetaStock, but if you're using a different platform and you want to take advantage of it, it is available on several. So Michael wanted to know, why didn't you sell when the Bollinger Band was breached?
Just to clarify the question, why didn't I sell when the Bollinger Band was breached?
Correct. I think it might have been one of the examples that you've showed earlier, but he was wondering if you sell when the Bollinger Band is breached.
I do, yeah. So I often play the slingshot in both directions. So I'll short when there's a breach of the lower band and I get a trade trend sell signal. Again, both of these, the trade trend indicator and the slingshot strategy can both be used as standalones, but they're very powerful when used in combination. There's kind of a synergistic effect there. So I like to look for both, but I will short in those circumstances and then look to buy when I get a buy signal after a slingshot is developed. So yeah, I do play both directions there.
All right, Kenneth says, I think I can see the price action for the buy signals, but I do not see how the sell signal candle shows a market reversal, as some seem similar to previous candles in the example that didn't result in a reversal. That was about 10:55 a.m. So it must have been one of the charts you were looking at.
Okay, let me look. I think I can see the price action for the buy signal, but I do not see how the sell signal candle shows a market reversal. As some seem similar to previous candles in your example. So you don't care about the candle formation. So we're not using candlestick patterns. The candle could be a bullish candle. What you're looking for is a breach of the lower Bollinger Band and a simultaneous divergence of the outer bands. Same thing with the trade trend sell signal. It doesn't matter if it's what the candle formation is. You can get a sell signal on a bullish candle. Okay. So the way that it works is you need to have follow through. So like there was a sell signal back here on the SPY on March 6th. So if I go into expert commentary in the platform, okay, and this is where you're going to find all of your instructions for the signals. All right, and I go over to, well, was there a more recent one? Let's see, this one came in, that one was March 11th. Let's do this March 6th one. Okay, so if we go back to March 6th, it's going to tell us the criteria for a sell setup has occurred, and then it's going to give us a suggested entry price. So use a sell stop limit order if price trades down to 47.15. Well, it did, and that's why you see the confirmation arrow. So the diamond is your warning in the platform, in the MetaStock platform. The arrow is a confirmed entry. So not every forecast will result in follow through. That's why you'll see diamonds without an arrow. So it's the arrows where you get the confirmed entry. Okay, so there was actually just one, and that's where one of the nice things about the indicator, when you get in a chop like this, it can keep you out. So there were actually like 4 signals that didn't reach their confirmed entry. So there's no trade there. Okay, the trade was on the confirmed entry, which is the down arrow here. And there we get a nice sell-off. I don't have the Bollinger Bands plotted, but this is very likely a slingshot. Okay, so the diamond on the MetaStock platform is the warning, but the candle formation doesn't matter. It could be a bullish candle, a bearish candle. It looks like that was, you know, kind of a bearish candle with close near the low, a long wick on the upside, but it doesn't matter. But in any case, the sell signal can come in anywhere. And remember, the trade trend indicator is not directly tied to the slingshot strategy. They're not correlated. Okay, we're just looking at using them in combination.
Cool.
So you can use either one as a standalone.
Great, that's a good example, and it was a good way to show off the commentary too. So good job with that.
Yeah.
Juan wants to know, and you might need some help with this one. He'd like to know what the cost for MetaStock is annually.
Yeah,
I'm happy to take that one if you'd like.
Sure.
Okay. So we have a couple of different versions of MetaStock, but the cheapest version of MetaStock, or the one with the least investment anyway, is going to be called MetaStock DC. DC stands for daily charts, but it updates all day long during the day. You can scan during the day. It just does daily, weekly, monthly, and annually. That product's actually been rated #1 in its price category for 33 years in a row, including this year. And it's only $75 per month. We'll throw in a version of that or our free real-time or our full real-time version as a free trial as part of this offer, so you can evaluate it and make sure that you understand and that it's helpful for you before you start paying for the MetaStock package. There you go. Those are the end of the questions, Jeff.
Great. Well, it's always a pleasure to be here. And
I love having you.
Yeah, I love it. And
are you getting sick of me saying that you have the best first name ever?
Yeah. Our mothers did well. I
so you can get if you want to take advantage of this, go to altostrading.com/trade-trend. It's a $9.97 offer. It's only available for the first 25 people. If you have questions, you can give us a call or you can chat with us online. The phone number here at MetaStock is 800-882-3040. I've got that one memorized. Our chat is metastock.com/saleschat. And if you need anything, make sure to reach out. We love to talk to you. We'd love to answer any questions you've got. Love to help you get set up. That's all I've got here, Jeff.
Well, thanks again for having me. Thanks to all of you for joining. I hope you find the Slingshot a valuable addition to your trading arsenal. And I hope that you enjoy the trade trend indicator. Give us your feedback. Let us know how it's working for you. And thanks again, Jeff, for having me.
All right. Thank you, Jeff. All right. Thanks for being here. I hope it was helpful for you. If you're watching us on YouTube, make sure to like and subscribe. Let me know if you need anything. Stay healthy. Stay well. I'll see you next time.